watching CNBC TV 18.
The Nifty is opening about 105 points lower.
We have seen some recovery, and right now the Nifty is down just 58 points.
Well, what can we say about this market? It's just extremely strong, and it's perhaps resilience personified.
The Indian markets outperformed yet again. We ended in the red, but in fact we pulled back and we were big outperformers in comparison to the globe. The real strength was seen in the mid-cap index.
Well, that was the day so far. If you just take a look at the way the Indian markets performed today, the closing will tell you that the Nifty ended about 90 points lower, the mid-caps outperformed, but through the day there was a fair amount of volatility, and in the context of the world currently, we can be considered extremely good performers in today's trading session, and not just today, but all through this month. Hello and welcome. You're watching us here on Markets Today on CNBC TV 18, where we track 6 hours of trade in 5 headlines. Let's talk about all the headlines that we're tracking from today. Stock markets stumbled across the world after US Federal Reserve hikes policy rate by 75 basis points for the third straight time. Indian markets remained relatively resilient, with the Sensex and the Nifty ending with cuts of 0.5%. Shares of Fortis Healthcare plunge after the Supreme Court refuses to allow the open offer made by Malaysia's IHH, seeks a forensic audit of the deal, and remands the matter to the Delhi High Court. The Apex Court awards 6-month jail terms to former promoters of Ranbaxy, Malvinder and Shivinder Singh, over wrongdoing in the 2008 Daiichi deal. The stock down 15%. The Indian rupee, that was the headline today, fell to a record low against the dollar, breaching the 80 mark, and this is the biggest single-day fall that we've seen in the Indian currency in the last 7 months. All of that happened because US Federal Reserve's latest rate hike took the cost of borrowing in the United States to its highest level in 14 years, also signaled more rate hikes probably till March next year as it battles to tame inflation. And finally, we're talking about a lot of stocks in focus. Dodla Dairy gained after notable investors checked in. SpiceJet also was under pressure, continued to be under pressure as the DGCA extended a cap on its flights, even as sources suggest it may hike staff salaries. Let's tell you what's on the show today. We have lined up for you in Market Opinion, Sunil Kaul of Goldman Sachs and Ajay Srivastava of Dimensions Corporate Financial Services. We also have comments from the newly appointed MD and CEO of CSB Bank, Pralay Mondal. Let's start with the markets then. Stocks tumbled across the world after the US Federal Reserve hiked policy rates by 75 basis points, taking the cost of borrowing to its highest level that we've seen in the last 14 years. The Indian markets managed to show a relative resilience. The Sensex slipped about 300 points, with the Nifty ending about 90 points lower. It was a volatile session, with the low of the Nifty being around that 17,500 mark, with the high being a little over 17,700. It was also weekly options expiry. So in light of all of that and the mid-cap outperformance, we've actually done well. Anuj Singhal joins in with the market wrap.
Well, the market was down, but not out. I mean, it showed some resilience. In fact, at one point in the afternoon, the Nifty had turned in the green. And this despite the big risk-off that we saw globally. The Bank Nifty, though, was a problem for the market today. That saw a big decline. And even though FMCG stocks participated on the upside, they couldn't really counter the weight of the Bank Nifty. The market breadth, though, today was strong through the day. The other big worry was what was happening with dollar rupee, where there was a sharp move towards 81. Banks were weak, so Axis, HDFC, Kotak, ICICI all were down, and some other prominent losers included names like HDFC and Reliance, and throw in a Power Grid as well. On the gaining side, all consumption names led by Lever, Titan, Asian Paints, Britannia, ITC and Eicher Motors were the other stocks doing well. In the F&O space, you had some gainers like Metropolis, which did well. Tata Chemicals and Page Industries made a fresh high. Well, there's clearly some big global risk-off which is happening right now. So far, our market has been resilient, but for the last couple of days, there are indications that perhaps at some point, our market may also get hurt. For now, today, the market sort of dodged a bullet.
It did dodge a bullet. So let's talk about what the experts made of this. Sunil Kaul, the APAC equity strategist at Goldman Sachs, said that the 75 basis points rate hike by the Federal Reserve was absolutely in line with expectations. But he did say that valuations in the Indian market are expensive versus the rest of the region. So going forward, he's eyeing some consolidation in the Indian market. Not price correction, but perhaps some sort of time correction for the next 3 to 6 months.
The 75 basis points hike which we saw was in line with our expectation. The guidance obviously was a little bit much more hawkish, both in terms of the dot plots, but also in terms of the press conference later. And so we were actually looking at the Fed terminal rate of 4 to 4.25 range, and obviously the target rate was 50 basis points higher. So as a consequence of that, we also just changed our rate forecast. So we are now looking at similar target for Fed fund rate at 454.75. So India kind of checks that box where it's one of the domestically demand-oriented markets, somewhat more defensive, but I would still point the fact that valuations in the market are a little bit more extreme or on the higher side, at least in terms of premium to the region. And so our base case here is that markets consolidate, at least on the next 3 to 6 months.
Right, on that note, let's also get you some more market opinion coming in from Ajay Srivastav, who's the CEO at Dimensions Corporate Financial Services. He said that the Indian market is actually in a better position versus the US market at this juncture. He also believes that ITC is an undervalued stock. Remember, it's one of the best performance that we've had in the index so far this year. And at the same time, it's just a few rupees away from its all-time high. But still, there is a fair amount of value. Let's hear Ajay Srivastav out.
We are in a better place than what America once was, the haven of investing. Now it's a last choice of investing. So even the investors in India who wanted to take money to the US or global investors, it's not an option for them now because that's a country in decline where there is no chance of you making returns given what's happening on the political side more than even economic side. So all said, demand supply is good for Indian stocks. We are a good kind of a insulated economy at this point of time. Market is insulated. And RBI still insists on negative interest rate for savers. Till that continues, you have a very safe journey in equity markets.
To the second headline now, and the stock of the day, it was Fortis, which was down 15%. It's a setback for Fortis Health. The Supreme Court has refused to lift its stay order on the Malaysian IHH Healthcare's open offer, and it has also remanded the issue to the Delhi High Court. The stock tanked almost 20% in trade at one point before closing 15% lower. The Japanese pharma giant Daiichi Sankyo challenged IHH's proposed 31% acquisition of Fortis in an effort to hold founders Malvinder and Shivinder Singh accountable for an arbitration award of 3,600 crore rupees resulting from a fraud claim. The Supreme Court today sentenced the Singh brothers to an additional 6 months jail term. Ekta Batra joins us with all the details. Ekta, what does this mean for Fortis Healthcare shareholders?
The news of a stay on the open offer and a possible forensic audit is a setback for Fortis shareholders. First, a quick background of the deal that took place in 2018. The twists and turns for the Fortis sale began when the promoter-appointed Fortis board entered into a deal with TPG Manipal in March 2018, after which they agreed to consider other unsolicited bids, which eventually resulted in the board opting for the Sunil Munjal Berman bid in May. The institutional investors, unhappy with the promoter-led board, eventually reconstituted the Fortis board and decided to begin a fresh bidding process. In what was a highly publicized and, might I say, scrutinized bidding process, IHH's 4,000 crore bid was chosen over TPG Manipal by the board, taking into account recommendations from financial advisors such as Stancy and Upward Capital and legal advisors Luthra and Luthra and Cyril Amarchand Mangaldas. The 26% open offer was triggered by IHH after they infused 4,000 crores in Fortis for 31% stake. The 3,350 crore open offer put on hold 4 days before it was expected to begin on a plea moved by Daiichi Sankyo. The delay in the open offer has thrown up a few questions, such as what does this mean for IHH? The Malaysian conglomerate, despite the delay in the open offer, according to the Fortis management, has been committed to Fortis. However, analysts point out concerns over a forensic audit and uncertainty over the open offer might make them look at Fortis as a possible M&A candidate. The other question is the shareholders. They've seen a delay in the open offer since close to 4 years. SEBI too had urged the courts in 2020 to allow the open offer to go ahead. Experts, however, point out that yes, while it is the right for shareholders, the open offer has to be put into context. In this case, with the validity of the deal in question, the open offer doesn't take precedence. Lastly, what about the Fortis stock and overall operations? While the stock has corrected today, it has given returns of over 90% when compared to the open offer price of 170 and the 52-week high that the stock was sitting at last week. In terms of performance as well, the hospital chain with over 30 medical facilities recorded a growth in both revenue and EBITDA since the IHH takeover, with Q1 FY23 seeing one of the best quarters for the hospital business. While Fortis has said they are seeking legal advice to decide the future course of action, going forward the street will closely watch factors such as a forensic audit, hospitals sustaining their performance, IHH's commitment when it comes to expansion plans, pending deals such as SRL Diagnostics, PE firms exiting, and lastly, Fortis being an M&A candidate itself.
Take that point, Ekta. Thank you so much for that. Let's move on to the third headline for the day. The US Fed's hawkish commentary sent the Indian currency to a new low, crossing the 80 per dollar mark as the dollar index climbed to its highest levels that we've seen in the last 20 years. The rupee closed at its lowest ever level of 80.7. And as you see, the last hour or so saw a big smidge ending around that 80.86 mark itself. Lata Venkatesh is here to explain the rupee's fall and why the RBI this time did not step in to prevent the depreciation.
Well, it's quite a historic day. For so long, the RBI had protected the 80 rupee to the dollar mark up until yesterday, as it were. And more hawkish than expected Fed has allowed the RBI to let the rupee breach that mark. In fact, it's done more. Today is perhaps, in intraday terms, at least one of the sharpest falls for the rupee in a day. All Asian currencies have fallen between 0.5% and 1%, and the rupee is at the higher end. It's fallen intraday by 1% thanks to this guidance, and it had to. I mean, this was a writing on the wall. Also, because of the China factor, the rupee has appreciated versus the Chinese currency considerably. From March, it required 12 rupees to buy a yuan. In July, you required 11 rupees 80 paise to buy a yuan. And as of yesterday, you required only 11 rupees 30 paise to buy a yuan. That's not good because we have the highest trade deficit with China. So the dollar is one reason, but the yuan is another big reason why the rupee had to be allowed to be depreciated at some point in time. And the question now in the market is, what will be the new pivot or low for the rupee? Will it get protected at 80.25? And how much will the RBI, support at the higher end? Will it be 81? Will it be 82? There are all kinds of debates, and the days to come will tell you that. The bond markets have also seen a significant fall for several reasons. US yields have gone to 3.54, 56. The Indian bonds didn't adjust. A weaker rupee also means expensive imports, and that also has a bond negative, higher inflation impact. So today there was this 10 basis point adjustment. The market is also veering around to the view that India's inclusion in the JPM bond index is not imminent at all. Which means, what is the reason to buy bonds right away? There are more inflationary reasons. The market is also adjusting to the fact that come September 30, a 50 basis hike from the RBI is more likely than 35. And that explains this 10 basis point rise in spot bond yields and a 20 basis point rise in the OIS market.
Take that point, Lata. Thank you for making sense of that. With that, we slip into a short break, but you stay tuned. We'll be back in a jiffy with all the other headlines that we're tracking today.